Today we're excited to have Steve Arpin and Bill Otton from Beutel Goodman Small Cap Fund and the Morningstar Equity Fund Managers of the Year. If you look at the returns from 2016 and compare it to the typical Canadian small cap benchmark, performance may not look that strong, but I think given that the market was driven more by cyclically oriented metals and minings and energy names, I think your performance, given that you were underweight those sectors, really did stand out. So maybe you guys could just point to some highlights from 2016.
Sure. Well, what I would say is a foundation of Beutel Goodman's process and the small cap process is really around the idea of capital preservation. So what we look for is we control risk on a business by business basis. We run a concentrated bottom-up portfolio, usually on the average of about 40 names. And we look for businesses that are free cash flow generative and have good franchises. And then we buy them at a significant discount to what they're worth. We also have longer term holding periods. We look for about a 4-year time frame. And we demand superior returns in the small cap area. So we think that what's critical to compounding money over time is really preserving your capital and then making company by company decisions that control risk. And we've been really successful with that over time. It has led to a portfolio that has less of a resource bias. But I think we've had some excellent companies that we have owned with those characteristics that have really helped our performance. And two of those names that I would mention would be CCL and Uniselect.
Great. And just touching on the resource space, I know you guys are underweight it, and it's not usually one of your favorite areas to ply your trade, but I think you guys did have some good stock picks in that area this year, and maybe you could just touch on Alamos Gold, for example, and how that fits with your process, and how you kind of responded to the market rally in that stock this year.
Yeah, in 2016. Yeah, so Alamos Gold is an excellent quality gold company. We value our gold companies based on our view of a long-term gold price. We look for companies that have very strong balance sheets, good management, good asset bases with the ability to grow. And Alamos Gold fit that criteria. We, in the rally in 2016, obviously the stock went up, and we did trim our position, and we're able to reduce our exposure to gold at an opportune time in 2016.
Great, and so looking forward to 2016 and beyond, or 2017 and beyond, is there areas of opportunity or kind of macroeconomic themes that you see in the market that may create challenges or create opportunities for the fund?
So in general, as you know, Beutel Goodman really prides itself on all of its work being on a bottom-up basis. We end up with our sector weights based upon our evaluation of where value lies in the market. And as I said before, we do, because of our bias toward businesses that have sustainable free cash flow and competitive advantage, we do tend to end up with businesses that are less resource focused. That being said, in 2016, we did take the opportunity to add to businesses positions that we thought were attractively priced, but were under pressure because of commodity prices, particularly energy. And some examples of that would be, we bought a position in Canadian Western Bank, and we bought a position in Wajax. Also, we've been able to find a lot of opportunities in businesses on a stock-by-stock basis, companies where we can buy them at significant discounts. We continue to find those opportunities, and I think that that's the most important thing to our potential ability to create long-term value and returns for our shareholders.
Great. Steve, Bill, congratulations once again, and thanks for joining us.
Thank you.
Thank you, Jeffrey.